Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 7th of September, 2018. Today I'm joined by my co-host, Mike. Welcome, Mike.
Hello.
We've got an action-packed show today, so let's get straight into it. Let's get on with the global market capitalization, top 100 here. We've got the old Bitcoin at number 1, Ethereum number 2, XRP Ripple number 3, Bitcoin Cash number 4, EOS 5, Stellar 6, Litecoin 7, Tether number 8, Cardano 9, and Monero rounding out the top 10. We haven't had too much down action or up action this week. It's been kind of steady as she goes, with a bit of up and a bit of down as we've had the last couple of weeks, so that's all right. We've got the current market cap at $217 billion, 24-hour volume at $16 billion, Bitcoin dominance 52.2%. Let's go on and have a look at the total market capitalization for the last 7 days. We started out at $225 billion. Looks like we went down to around a low of $206 billion. And we are back up to currently $217.9 billion US dollars. Quick look at Blocktivity. BitShares coming in at number 1, Steam number 2, EOS number 3, Bitcoin number 4, Ethereum 5, Komodo 6, Ethereum Classic 7, Waves 8, Ken 9, and Litecoin number 10. You can see that, as usual, Ethereum is at max capacity with 56,000 unconfirmed transactions. Okay, this week we're going to do something a little bit different. Normally every week I make a kind of a short list of articles from Cointelegraph, and then I whittle that down to a super short list of key stories that I do in the week. And I thought this week I would go through the headlines, just give the headlines of some of those stories that normally I wouldn't talk about at all. So that way you get a kind of a better feel for what happened this week, and yet I'm not wasting everybody's time with a lot of stuff that's not so key. So I'm just going to go ahead and do that real quick. Give you some of the top headlines that I would normally leave out. So first off, we got Austria to use Ethereum public blockchain to issue $1.35 billion in government bonds. It's kind of interesting. By the way, all these headlines I'm also going to link also in the show notes. So if any of these headlines do catch your attention, you want to check them out, you can still do that in the show notes. There will be links to the full stories. Number 2, Andreessen Horowitz invests $15 million in stablecoin firm MakerDAO. So that's kind of interesting. MakerDAO's building several stablecoins, and it looks like they've got some, interest in some bigger investment groups now, which is curious. Next, we've got largest Brazilian brokerage to launch exchange for Bitcoin and Ethereum. That's kind of interesting. Brazil's a big country. There's a lot of capital over there. Could be good. Next, we've got Bank of America files new patent for multiple digital signatures on a distributed system. So as people who follow the show know, Bank of America is one of the corporations that's investing a lot into patents in the blockchain space. Next, we've got IBM awarded patent. So that's not just filed for it. They've actually been awarded one now for autonomous self-serving devices within blockchain-based Internet of Things system. So there we go. It's all happening for IBM. They're really going full throttle into blockchain, so good for them. Next, we've got, and last for headlines this week, Goldman Sachs leads $25 million funding round for blockchain payments startup Veeam. So that's quite interesting. Blockchain payments are, not sure if I think this is a B2B payment system, but in any case, that's interesting to see that they're finally off their duff and stopped complaining about blockchain. They're getting involved. Okay, on to our key stories for the week. Opera launches a special Labs version of built-in crypto wallet for desktop browser. Now, I've mentioned this a couple times in the past. First, when Opera announced they were going to start looking at incorporating a crypto wallet into their browser, and then I think a month or two ago, they actually went ahead and got one into their mobile browser. Now they've got one for their desktop browser. So I guess if you're using a mobile device and you've got your system there, you can actually get the Opera for your desktop, and you can log in with the same credentials and have access to the same wallet system there. So that's interesting. Opera is launching today a Labs special edition of its desktop web browser with built-in crypto wallet functionality, according to an exclusive blog post shared with Cointelegraph Monday, September 24th. Opera first announced it would be integrating a built-in crypto wallet for its desktop browser in early August, and Labs is today open for private beta testers of Opera for Android. According to the blog post, the new edition will enable users to authenticate Web 3.0 and decentralized application transactions made on their computer using their Android phone. Labs is therefore fully interoperable with the mobile crypto wallet that Opera first launched as part of its beta Opera for Android in July earlier this year. Opera has emphasized that users are not required to set up a new wallet and can continue to securely store their wallet keys on the hardware platform. Oh, sorry, I'm misreading it. On the hardware of their phone. The paired mobile desktop system will also take advantage of the phone's system lock to secure transactions using fingerprint confirmations for both token transfers and D-app interactions. As with the mobile app, the desktop client supports digital collectibles, non-fungible digital things such as CryptoKitties or baseball cards that users have been able to send directly between Opera crypto wallets as of September 7th. In July, electronics giant HTC reported that it would be releasing a smartphone, the HTC Exodus, containing both cryptocurrency wallet and CryptoKitties later in 2018. As previously reported, Opera's interoperable mobile desktop wallet works by enabling users to connect their desktop browser to their existing crypto wallet-enabled mobile app by scanning a QR code, a system that Opera has been using to synchronize desktop mobile apps for several years, as for example with its WhatsApp web client. Opera's web and mobile browsers have notably included anti-cryptojacking software as of January this year. In August, web browser Firefox announced it will be blocking cryptojacking malware in future versions of its web browser as well. So that's good to hear. Opera has always been at the forefront of innovation in the browser space. They've invented a lot of things that Firefox and both Chrome have put into place later on down the track. So it's good to see they're still leading the pack. They're still an interesting browser to keep your eye on. Our next article, Coinbase introduces Coinbase Bundle, designed to simplify crypto trading. It's a little new feature, new additional service for Coinbase. Cryptocurrency exchange and wallet service Coinbase has rolled out a new update called Coinbase Bundles, which is designed to simplify cryptocurrency trading, according to an announcement published September 27th. Coinbase Bundles are a basket of 5 cryptocurrencies supported on Coinbase and purchased in proportion to their market capitalization in US dollars. The bundle consists of Bitcoin, Bitcoin Cash, Ethereum Litecoin, and Ethereum Classic. The smallest bundle costs $25 or £25 or 25 euros. While Coinbase has not set up maximum purchase size for a bundle, the exchange limits daily purchase amounts on a per customer basis. Once a customer has bought a bundle, each type of virtual currency will be stored in their Coinbase wallet and can be bought, sold, sent, or received as an individual asset. Coinbase expects to introduce the new product in the US, EU, and UK in the coming weeks. Along with the Coinbase Bundle, the exchange will now host informational asset pages about the top 50 digital currencies in terms of market capitalization, in addition to a Coinbase Learn section aimed at educating newcomers to cryptocurrency trading. I'm not going to go on. It's more just drivel about Coinbase, but yeah, it's an interesting idea. So I think that could see some increase in at least those particular cryptocurrencies, make it easier for people to get in and just buy kind of like an ETF in a way, but all in one bundle in Coinbase. Our next article is also a Coinbase article. New Coinbase listing process will allow exchange to rapidly increase supported assets. Cryptocurrency exchange Coinbase has announced a new process that will allow it to list more digital assets faster, according to a statement published September 25th. Per the announcement, the new process refers only to digital assets that are compliant with local law, which means that certain assets listed on the platform may only be available to customers in particular jurisdictions. Issuers who want to submit tokens at Coinbase via the newly adopted process will will have to use a special form which will subsequently be evaluated by the exchange team against their digital asset framework. Initially, there will not be an application fee, which is that's nice. I mean, some of these exchanges are asking for pretty large fees. Binance. However, Coinbase reserves the right to introduce a fee in the future in order to cover the legal and operational costs related to assessing and listing new assets. Coinbase states the new process will allow it to list most assets over the time that meet our standards. Since the exchange expects the process to make new token listings more frequent, those listings will be announced only once they become available on one of Coinbase public products. So hopefully this will see a lot more products, a lot more assets being listed on Coinbase, which, is great. Coinbase is one of the largest exchanges in the United States, so I think it could be really, really good.
Yeah, it'd be interesting to see them actually get beyond the little handful that they seem to have trading, the GDAX, which I assume is the, their exchange version, of Coinbase that they actually do the trading on and stuff. I would like to see them with a big, broad swath, hopefully get like the whole top 100 or something. That'd be really nice to see an exchange with that.
A lot of people use Coinbase, and that's why I put the article in the news here, but in our news thing. But I think it could be good. We'll see how things go for them. Hopefully, it will increase adoption. That's what we want to see. Okay, our next article. Breaking. Google to reverse crypto ad ban for exchanges advertising in the U.S. and Japan. The U.S. tech giant Google is set to update its ad policy in October, re-allowing some crypto businesses to advertise on its platform. The company announced this in an official post Tuesday, September 25th. According to the official announcement, starting in October, Google will allow registered cryptocurrency exchanges to advertise on its Google AdWords platform, targeting the U.S. and Japanese audiences. The announcement reads, quote, advertisers will need to be certified with Google for the specific country in which their ads will serve. Advertisers will be able to apply for certification once the policy launches in October. This decision follows an announcement in March that all crypto-related businesses will be banned from buying ads on Google AdWords, described by industry insiders as unfair and troubling. To justify its crypto ad ban, Google said that it was protecting its customers from fraudulent offerings, including but not limited to initial coin offerings, cryptocurrency exchanges, cryptocurrency wallets, and cryptocurrency trading advice. Other tech giants such as Facebook and Twitter have made similar statements in a wave of crypto advertisement bans earlier this year. Since then, Facebook has reversed its ad ban for pre-approved cryptocurrency firms while still maintaining a ban on initial coin offering advertisement, a move similar to the one made today by Google. Back in June, during an exclusive interview with Cointelegraph, Wikipedia's Jimmy Wales commented on the attempts to regulate the blockchain and crypto industries, saying, quote, you can't ban math, you can't ban blockchain. In July, Google's co-founder Sergey Brin announced that he is an Ethereum miner at the Blockchain Summit in Morocco. So it looks like Google's finally getting their act together and going to unlock some of their ad bans, which would be great. I think it's going to be great for the industry. I think it's hurt the industry a fair bit because, Google is one of the main ways that a lot of people are introduced to things, sadly, I got to say, but it's true. And having these ad bans lifted, I think will bring more interest back into the space. So, again, that's something we really like to see. Okay, our next article, of course, is to do with Bitcoin Core's bug that we found out about this week. Well, we found out about it last week, I think, but then we found out something new about it this week, which was a bit of a shocker. So let's have a look. Software vulnerabilities continue to be a red flag issue in the crypto community. Not long ago, the top 5 cryptocurrency EOS network experienced a vulnerability right in the dawn of its development. The same thing happened to Ethereum when a series of distributed denial-of-service attacks led to a significant delay in the operation of the nodes. And the news about another bug in the code came out yesterday with the announcement made by Monero developers to patch the vulnerability which allowed attackers to burn funds. It could seem that such a kind of bug can affect any crypto, but not Bitcoin. But what could be worse than the vulnerability of a coin with a daily turnover of 4.5 billion? Perhaps only ignorance about the existing threat. The recent Bitcoin Core vulnerability is a clear case in point. Most catastrophic bug ever. Yes, indeed it was. On September 18th, Bitcoin Core developers announced the release of an update to fix the denial of service attack vulnerability. The most shocking discovery was that such an attack could be succeeded by flooding the full node operators with traffic or by sending them information that could trigger a network crash. The fix, CVE 2018-1744, was initially addressed to several developers who were working on both Bitcoin Core and other cryptocurrency-based projects. The bug was identified by Bitcoin Cash developer Almeni, who concludes that his Medium post that CV 2018-17144 is, quote, the most catastrophic bug in recent years and certainly one of the most catastrophic bugs in Bitcoin ever. Almeni publicly expressed his feedback without hesitating to call Bitcoin Core's most prominent developer arrogant. The vulnerability is being tracked in the CVE 2018-17144 advisory, which includes the following description. Quote, the Bitcoin Core 0.14.x before 0.14.3, 0.15.x before 0.15.2, and 0.16.x before 0.16.3, and Bitcoin knots, it just goes on, 0.14.x through 0.16.x before 0.16.3, allow a remote denial of service application crash exploitable by miners via duplicate input. An attacker can make Bitcoin D, which is Bitcoin daemon, or Bitcoin QT crash. However, the vulnerability was much more serious, as it could have allowed malicious miners to artificially inflate Bitcoin supply via a simple type of double input. I want to be clear here because they're talking about these numbers. They're giving you numbers of the Bitcoin Core where the vulnerability was created and where it was basically terminated with the recent update. They're not actually telling you how long that period was. I'm going to tell you it runs from September of 2017 to September of 2018. That's right, a whole year Bitcoin has been vulnerable in this manner. A whole year, folks. It's mind-boggling. In simple terms, the recent event is related to the consensus code. Miners could crash blocks in case they tried to validate a block containing a transaction that attempts to spend the same input twice, causing the whole Bitcoin infrastructure to crash. Furthermore, providing that those invalid blocks need to be mined anyway, malicious miners willing to disregard block reward of 12.5 Bitcoin, approximately 80,000, could even lead to destruction of the whole ecosystem. And they've got a little graphic here showing the double spend bug, normal situation, and then down here with the bug shows you what could happen if somebody disregarded the block reward and did the double spend bug, and basically could duplicate Bitcoins. Oh, I've got a nice little Bitcoin creation machine. A white lie or simple ignorance. Perhaps because of the possible catastrophic consequences of the error, developers decided to keep it a secret, having won the time to fix it and invited both miners and users to update their software aimed at eliminating possible crash. In the report made 2 days later, the developers explained that the team made every appropriate action in order to encourage immediate software upgrades, including building awareness for the concerned actors while delaying publication of the full issue's disclosure to gain time for systems to upgrade. According to the statement, the patch vulnerability existed in the Bitcoin Core software without repairment since version 0.14, while version 0.15 introduced the inflation vulnerability. Nevertheless, Bitcoin Core developers decided to disclose the full extent of the vulnerability after a majority of the Bitcoin hash rate upgraded to the patched software, while full node operators who have not complied with the guidance should do so as soon as possible. Bitcoin Core's statement resumed, quote, at this time, we believe over half of the Bitcoin hash rate has been upgraded to patch nodes. We are unaware of any attempts to exploit this vulnerability. However, it still remains critical that affected users upgrade and apply the latest patches to ensure no possibility of large reorganizations, mining of invalid blocks, or acceptance of invalid transactions occurs. Okay, yeah, here's the timeline. So you can see the DDoS vulnerability came about with 0.14, and that was in March 8th, 2017. The double spend introduction came with 0.15, and that was September 14th, 2017. And the fix of both bugs, September 18th, 2018. Well, technically it happened a little later when actually miners adopted the fix. Who found the bug? This is important. Among the catalysts to help resolve this critical bug was Bitcoin Core developer Corey Fields, who identified one of the most critical vulnerabilities of Bitcoin Cash earlier this year, which could have been so disruptive that transacting Bitcoin Cash safely would no longer be possible. Well, of course, that's not really a big deal, because who uses Bitcoin Cash anyway? It's hardly got any activity on its blockchain. Anyway, no, I'm being mean here. Anyway, completely undermining the utility and thus the value of the currency itself, as Corey argues here. Community reaction. The Bitcoin core development team has been heavily criticized by Bitcoin holders for the manner in which they rolled out the hot announcement regarding the bug and the patch. Indeed, their decision to publish the announcement without consulting members of the altcoin networks has disappointed many industry enthusiasts and contributors. Among those who have expressed public criticism was the self-named Bitcoin Core's secret agent Don Carvalho, who described in a series of tweets how Bitcoin Core's team was making decisions when the doors were closed. Here is his tweet. He says, I was a paying member of the original Bitcoin Foundation. They were mostly a train wreck. I attended their annual meeting at a conference in Amsterdam and met with their accounting person to ask some hard questions. She was actually pretty savvy. The event was another opportunity for crypto Twitter and especially the enthusiasts of Bitcoin and Bitcoin Cash to argue. Let's not forget about plenty of Bitcoin users who have been thankful and have shown appreciation for the hard work of developers to keep Bitcoin's network safe without being remunerated and provide their services mostly on a volunteer basis. Well, do they? I mean, they might hold a lot of Bitcoin. I mean, are they really doing it for free? I don't think so. They've got a vested interest, so I think it's a bit nebulous. Now, possible consequences. Okay, despite the fact that the bug has been fixed, the question remains: what would have happened if the error had not been detected in time? In particular, some users wondered whether somebody managed to exploit this vulnerability to produce a bunch of fake Bitcoins. One of them even discovered that 0.1 Bitcoin was generated in the Bitcoin testnet as a result of such misuse. So that's on Twitter there. I actually responded to one of the Bitcoin Core devs over there on that tweet, and because it was unclear about. I mean, I think the fact of the matter is they don't know fully yet if this was exploited. Because miners have to, when you update the core and you update everything, the software will find if there's any problems, because it will go through and it will verify everything in the blockchain. The software will detect problems, but then the miners who are running that software have to basically report if they perceived any problem. I guess that hasn't happened, so I guess it's okay, but we'll find out probably in a few more days if there was anything that happened, but it'd be interesting to watch. Anyway, so they gave some words of reassurance by Bitcoin Core and their team update. They said, quote, stored funds are not at risk and never were at risk. Even if the bug had been exploited to its full extent, the theoretical damage to stored funds would have been rolled back, exactly as it was in the value overflow instant. However, there's currently a small risk of a chain split. In a chain split, transactions could be reversed long after they're fully confirmed. Therefore, for the next week or so, you should consider that there to be a small possibility of any transaction with less than 200 confirmations being reversed. Another Bitcoin developer, Peter Wheel, not sure how to pronounce his name, assured that, quote, if this bug would have been exploited already, it would have been noticed by any such new node. That's probably correct. Later, he added that in case such a bug had been exploited by someone after the update release, all 0.14.0 version nodes would crash, and everyone who upgraded would see warnings about this not being on majority chain. Well, while this may sound all convincing, one more essential question still remains. What if not all the users managed to patch the upgraded version? More fuel to the fire that has been added by Cobra Bitcoin, lead backend developer at OpenBazaar, who suggested that, quote, 80% of the network is still running vulnerable software. The percentage of this network is minimal, according to Emin Sierra's statement, with a major patch corresponding to economically worthless nodes. If they affected something useful, someone would have bothered to upgrade them. Okay, well, that's a bit cavalier, I think, but... So, all's well that ends well. Bitcoin's vision of decentralization and transparency seems to be minimized when looking closely at CVR 2018-1744 episode, indicating that major decisions are being taken by a small minority of members of the community. Therefore, the fear of a major loss of billions of dollars in case of a different decision seems to be obvious. The probability of crashing the entire system was high in this saga, as the bug has been variously described as very scary, major, catastrophic, and one of the top 3 or 4 most severe bugs ever found in Bitcoin's code. Well, yeah. So there you go. people go on about how the Bitcoin Core team is one of the best, the best software teams out there. I'm not sure why people think that, but I would grant that there should be more eyes probably on Bitcoin Core's code than on the code of most other cryptocurrencies. And the fact that this bug slipped through for so long is really surprising to me, and a bit scary, because we know how many other altcoins there are, how many other projects there are, and yeah, if there are so many eyes on Bitcoin Core and this thing slips through, how many bugs are out there in some of these other cryptos? I'm not trying to be a fearmonger here, but yeah, it's something to think about. I guess if you're going to be a big investor in one of these coins, you maybe ought to have an audit, hire some auditors to look at the code. Yeah, something to think about. All right, our last.
More reason for open source.
That's right. Well, that's why we like open source, because eyes can be on the code. But even in this case, Bitcoin Core is open source and it's there, and these things can still slip through. So our last bit of news, this is our discussion topic this week. Study: Bitcoin investors and speculators maintained their positions over the summer. So basically, before I even found this article, I'm going to go back here and let's go to the global charts. And I'm going to look at the last 3 months. Actually, I'm going to maybe shift it to look at the last 6 months or so. I'm going to go back to, I'm just going to plug it in here, plug in a value to look from like the third month of the year, March. And go to the linear scale. And you can kind of see that volatility in the whole market seems to be going down. And of course, this is total market capitalization. I need to be looking at Bitcoin here because the article is really about Bitcoin. But you can just look at this and just see that the market volatility for all coins seems to be going down a bit. But of course, Bitcoin is a huge influencer in this one. So let's see if we can just look at Bitcoin's market cap here. Is it on this page? No, it's not. I'm going to have to open it up separately. So I'll just click on Bitcoin there. Those. And it's loading the chart. And then I'm going to select to go back to March of 2018. And let's just blow that up a bit. And you can see, not that it's not still volatile, but the ups and downs seem to be slowing a bit here, right? So I'm not sure what that means for the future. I'm not going to be the kind of person who's going to tell you, oh, well, the volatility is calming down. That means it's going to stay that way. Or, oh, well, the volatility is calming down. That means it's going to go really wild here soon. It could be either. I don't know. I'm just pointing out that this seems to be a bit of a trend happening here. I don't know why it's happening exactly. We can speculate on that, and maybe this article will. Let's go back to the article and have a look at what it says. Bitcoin investors and speculators held their positions over the summer, while markets seem to have become more stable overall, according to a new study by Chainalysis published September 24th. The data presented in the report was compiled using the concept of standardized monetary aggregates. Specifically, the analysts categorized coins from the most liquid coins used for speculation transactions to less liquid coins held for investment, and the least liquid, or lost coins, or coins yet to be mined. There's 3 groups there. Subsequently, categorizing the money supply into monetary aggregates. Per the study, the monetary aggregates were, quote, extremely steady during the summer, showing that the amount of Bitcoin held for speculation was stable from May to August at around 22% of available Bitcoin. The amount of Bitcoin held for investment also showed stability during the same period at around 30%. Chainalysis suggests that this is a sign the market has become less susceptible to hype, having built tolerance to news flow, which, according to the report, is no longer able to push Bitcoin prices up and down. Instead, the market seems to have recalibrated after the entry of so many new market participants with different beliefs and expectations than those who held Bitcoin prior to 2017. The study further reads, the study further read. Both long-term investors and speculators maintained their positions over the summer, reportedly meaning that only a fundamental change like restrictive regulation or technology improvements could cause a market reaction. In addition to these findings, Chainalysis notes that Bitcoin has maintained growth in its user base from the end of 2017, suggesting that the first challenge of adoption, which is getting crypto into people's hands, is being overcome. In June, Chainalysis published a study which shows a switch from Bitcoin hodlers to speculators in the 6 preceding months. Since December 2017, the amount of Bitcoin held by day traders has reportedly risen to 5.1 million Bitcoin, almost equaling the amount held by long-term investors, those who have held the coins for more than a year, which equals about 6 million Bitcoin. Well, I think it's interesting to see. I mean, stability, I think, is a good thing overall, but we still need the speculators in there. We still need people in there to help moderate the price and to counter ups and downs as well. Hodlers aren't actually interacting with the market so much, so they're not really affecting the price that much, one way or the other. So it's really the active investors who are affecting the price. And I don't know. What are your thoughts?
Well, I think as far as for the currencies and the markets in general, once you get more people actually using the coins on an ongoing regular basis, you'll see the blocktivity numbers rise dramatically, I think, over the course of the time. You'll see the percentages get off the 0, 1%, 2% that some of the more high bandwidth coins have. You'll see coins like Ethereum and Bitcoin will end up getting to a point to where they very likely could be permanently pegged, at 100% with unconfirmed transactions because their systems are not adequate to process through the transactions quickly enough to allow the coins to be traded in the manner with which they, at some point in the future, when the transactions per second across the whole entire cryptoverse are significantly and dramatically higher than where they're at now. And that's something that if you go and you look at the number of transactions, for example, on the Visa MasterCard network, you go and ask, well, how many cryptos can handle that whole entire transaction network? How many could absorb that whole entire thing and still have room to spare? And
well,
that number
that's true. I don't know
getting
that.
higher.
I can't imagine that the whole Visa MasterCard network is ever really going to go to zero, because at some point they're going to start adopting new technologies and trying. I mean, they're still a for-profit company. They're still going to roll with the punches. And also, we have a more diversity of coins now that can take up the slack. There's EOS, which can handle a huge capacity. Bitcoin, they've got the Lightning Network. They're integrating it. They're working on it, and that. I mean, you and I don't really care for what's going on with that, but it could handle a lot more transactions if they get it working well. And
we're both
I don't know.
We're both of the same mindset on Bitcoin and the Lightning Network, and that when you start doing transactions that aren't registered on the network, then at that point you end up in a situation where the ledger and everything that it represents, as far as for being able to track everything all the way through, track all the transactions, that loses a lot of its appeal for whoever finds that appealing. And that's something that, while the Lightning Network allows the transactions to go through, it's a centralization of Bitcoin in the way that I see that it works, and the functionality of it is part of what we're trying to avoid with Bitcoin in general.
All the coins thus far that, like I said, I don't know, maybe Nano, I'm not sure, but you look at like EOS and those, they're much faster, but they're also much more centralized too. So, they have a democratic process to choose who gets to go through, who gets to do it, who gets to process everything on the network. And I'm not sure how Bitcoin's Lightning Network does. I mean, if that's a democratic process or if it's just, I don't know. I'm not sure how the Lightning Network works, so I'm not fully clued in on it. I would say, though, that Bitcoin, as I've said in the past, and Bitcoin Cash, they're just coins, and why do I want them when if I want to buy something like an ICO on EOS, well, then I've got to buy EOS, and I've got to buy the. Why not just hold EOS? I mean, I don't understand what the value is for Bitcoin. I mean, it's becoming more stable, so that's becoming a bit more of a use case for it as a gold kind of standard. But I don't know. It just, to me, I don't want that sort of thing in a coin either, because you hold, when you're just hodling a coin, you're taking that capital out of the economy. I'd rather be buying stuff that employs people at the same time. You know, I want to invest. I want to be an investor, and I like the fact that in the crypto community that when you invest, you can actually easily trade. You can actually go in and swap and or you could even go to a shop that accepts that crypto and you can buy something directly. I like that versatility that crypto has, and that's probably not going. I mean, the various forces in the banking sector certainly don't like that aspect of Bitcoin and other cryptocurrencies, and they've rallied against it in a lot of ways. But I don't think they can stop it long run. And that versatility really, to me, I just think I can certainly see there's a lot of people who always want to hold something like gold. So as long as Bitcoin maintains stability, then I guess that's going to be something that's going to be in demand by people who like that. But frankly, I think it's horrible because it's not good for the economy. The more people that just hodl capital away are basically taking capital out of the economy and locking it down, and that's destroying the economy. And when the economy goes down, we all suffer. Everyone, even the people who are doing it. So it just economically, it doesn't make sense to me. I guess it's kind of a fear. It's an investment out of fear kind of attitude, and I think that's really bad. Certainly, it's very prevalent today, though. So, yeah, well, that's what I'm thinking about it.
I'd just like to see more activity and, more ways and more places that you can actually use the various different cryptos to go and buy products and stuff. The news that we had on the Square and their, adoption of ways to use crypto using the Square platform was pleasant news. Anytime you can go and use your cryptos to do more than just hold and wait for the value to go up, turn and convert it back into. I would rather have it so I never have to convert into fiat.
Exactly.
Because I've been, for quite a few years now, ever since I ended up reading the book on, the J. Edward Griffin's,
Yes,
the Beast from Jekyll Island, Creature from Jekyll Island.
Yeah.
Ever since I read that, found out all about the fiat money and how it pretty much has infected everywhere on the world. I've been, somebody who is very strong believer in the, in the presence of legal tender laws. Bad money chases out good.
Yeah, getting rid of legal tender laws.
And if you get rid of legal tender laws, good money chases out bad. Well, if you have options, if you have competition for fiat currency, if you have ways to store and hold value outside of that particular way of doing stuff, you can't go and walk around and hand somebody a 100-ounce brick of silver for your purchase. It's not feasible to do so. And with cryptos, you have the ability to store the value, which is anything that requires time to create the thing that you're using for, the currency and stuff. Anything that has a time value involved has value. It takes time to mine and smelt and turn gold into coins. It takes time to do that. You can't just type a few keys and have an infinite value of gold. You can't do that. And with most of the cryptos, now granted there are some that have been pre-mined, in which case you have a certain X amount of those, but it takes time and effort and electricity to run the ledger. And as time goes by, that amount of energy that was expended to go and maintain the ledger stays in the value of the system. Now, granted, the perceived value by the customers may find that their perceived value of that coin has gone down over the course of time. But, when it's all said and done, if you want to think of the value, I mean, people consider fiat currency to have value, and it could be part of a mass delusion, but what's the real value of it?
Yeah,
and
well,
that's
as long
one
as
thing
people
that's all
accept
perception.
it,
Yeah,
has value.
and that's the key point. If people start accepting cryptos on an ongoing basis around the world, then at that point, the cryptos will be another place that people can store their money. And then when you look at the quote unquote prices on the exchange, it's like which went up in value and which didn't. The fiat currency that they can print up as much as they want, or the crypto, which is limited. Anybody who really knows economics and supply and demand will understand that it's not the value of the crypto that's volatile, it's the fiat that is actually volatile. And right now there isn't enough of a depth in the market. When you talk about a total market cap of $200 and some billion, that's a drop in the bucket compared to the total market cap of all the money in the world, all the SDRs, all the debt that the world has, and all the various different ways that money can be stored. It's a drop in the bucket. Now, when you start talking about a total market cap in the in the tens of trillions, or when you start getting into the hundreds of trillions, at that point,
then we're
you're
talking over is nearing completion.
Well, as far as for that, I don't know if fiat currency will ever go away until people just see that it doesn't have any value, or they can't buy. It's like cryptos now. If you have cryptos now, it's kind of difficult to go down to the grocery store and buy whatever you need from the grocery store, or go to the electronics store and buy, your new TV set, or go to a car dealer and buy a vehicle, or, go and hire people to go and help pick your crops. You can't go and do all that stuff with crypto at the moment. But if the situation were reversed, where people accepted crypto more readily because its value was stable, hey, this gallon of gasoline or a gallon of petrol has cost me the same amount for the past 3 years, whereas the price in euros or dollars or Aussie dollars or wands has varied constantly and whatnot. But as far as for that, it's like, okay, well, you can go and look at the prices, and the prices are pretty stable over the course of time. And the question is how much is the fiat currency fluctuating in value compared to something of a fixed quantity, fixed value like gold.
There's a lot of effort now. I mean, across a lot of different bigger financial groups to facilitate pay to facilitate the development of stable coins. And I think that's one of the reasons they recognize that if they're going to actually get people to be able to use these things, cryptocurrencies in the marketplace, and they need that stability. And it's even easier, of course, if you can link it to the value of an existing fiat, because so many goods are priced in that fiat. But just having the stability allows conversion. So, and holding. People are going to be more inclined to hold those things. Of course, all of these again are more like gold in the sense that they're not linked to companies, they're not linked to projects, so they're not actually investments per se in like the real economy. They're not creating jobs or anything, not many anyway. So I mean that's my thing anyway. I just would like to see, but maybe it's small steps. Maybe this stability in Bitcoin is a step that's going to facilitate further things down the track. These stable coins also may facilitate more things down the track. Once these if a stable coin gets picked up by, say, Square, and they start using that, and some of these other POS systems start using a particular stable coin that they feel is well audited and honest and a good stable coin to hold, then that could be a big turning point. And we could see people start to get into that. Of course, there's a lot of people who are afraid of these one world currency sort of things.
Mm-hmm.
I'm certainly not in favor of that, but at the same time, we've got all these alternatives now with crypto. And if the stable coin, whatever it is also listed in the market, in the crypto exchange markets, then going from one thing to another becomes fairly easy. So that to me doesn't scare me so much. Anyway, that's.
Yeah, for me, as far as for the big picture and the one currency and stuff like that, I've always thought that the more competition, the better prices you get. Prices
absolutely.
Almost always go down the more competition there is. And for me, as far as for world currencies, I don't trust anything that I don't not necessarily that I have the ability to look at, because I'm not a programmer, so I can't look at the code of open source stuff. But
Yeah.
I've said for quite a while now that any currency that has these three properties is something that I would consider a valid currency to use on a global basis indefinitely. And if it's open source, if it's anonymous, and if it's decentralized. So if they
Yeah.
have all three of those properties, that is a candidate for a one world currency. Now, not necessarily one, maybe 2, 3, 5, 10, 15 world currencies, but a global currency is what I would be thinking that would be a good thing.
Yeah.
For
I'm
one
not sure we're going to get the anonymity very quickly, but being able to trade in and out of the different currencies basically, to me, gives you the competition. Right? As long as you can trade it for another one, then there's competition. So I don't think that genie can be put back in the bottle now with all these cryptocurrencies
I don't think
out
so.
there.
No.
So I think that's really good. I don't think there should be any real fear of a one world currency anymore, because I don't really see how that can be controlled these days. And that's great. I think that's one of the great things that crypto has given us already, and will continue to give us on into the future.
Yeah, should be cool.
All right. Well, let's get on with the last topic of discussion this week, the Maidsafe update. So we've got here the summary. Just first point of the summary. Maidsafe has been working on delivering and running a test of Crust that should help us to see how the NAT traversal works for different people using all kinds of operating systems in a variety of cities, countries, and continents. So far, we have been running this test internally at the company with some encouraging results. 75% of connections are successful. Further to some tweaks and bug fixing, we are looking for your help to run a public test in the very near future. So that's super. Number 2, here's a sneak peek of what we're building to support the tests. Have a poke about and kick the tires of the evolving front-end user experience prototype of the, it probably should be Universe UI, of the Crust Testnet Analytics dashboard. There's links there. So number 3, Going Deep. User Going Deep has posted a really good article titled The Problem with Money online to the Safe Network publication on Medium. Have a read, give it some claps. It's medium.com, but the Safe Network section on medium.com. So that's where that article is. Next, we had an internal review of the progress that has been made on proof of concept for Zor URLs. We started working on a few weeks ago. We recorded this meeting, and we are happy to share it with you all. So yeah, there's a new video on the Zor URLs out on YouTube, so please have a look if you want to learn about this. It's quite interesting. Yeah, it's very interesting, actually. Next, for those who have been digging into the APIs, or maybe those who have been put off by some complexity, there's a pre-RFC on API improvements additions over on the development forum, where eyeballs and ideas would be greatly appreciated. And lastly, this week we got the Malice in Parsec RFC agreed on and added to the GitHub repo. So that's great. So the work can start beginning on that. So that's excellent. So I'm just going to read through the marketing section here. What's happening this week? We've been busy bees again this week with a few things to update you on. Big news is the internal, meaning internal to the company and including all remote members of the team. The internal Crust test we have been running. Broadly speaking, we saw around 75% of the nodes successfully connect via hole punching. While this very early result is really encouraging, the sample size is very small. And further to some tweaks and bug fixing, we will be looking for your help to run a public test in the very near future. For the remaining 25%, it will still be possible to port forward to connect. Great to see the hard work of user Ustallation and user Pavlazb pay off. So we can almost forgive Pavlis for daring to take a holiday. Seriously, though, great job, guys. This represents the start of several releases that we'll be making as we roll out Alpha 3, and we will keep you updated each step of the way via a series of posts and articles. Each will focus on different features and at times will accompany new pieces of software for you to get your hands dirty with. As you may be aware, Crust is a critical part not only of Alpha 3, but also to our vision of the decentralized web, as it enables users in a very non-technical plug-and-play way to join the network with commodity PCs from behind home routers. David Irvine recently highlighted how important this layer is with one of his customary and very colorful explanations when asked how fundamental trust was within the network. Quote, "You wouldn't build a skyscraper on sand, would you?" End quote. Our approach to a decentralized network is clearly distinct from all other projects for whom a decentralized web means running servers from home and or going through the complexities and risks of configuring a home router. Their approach is not wrong. It is just a different approach which can sometimes become blurred in the marketing noise of ICOs and YouTube interviews. But when one of your objectives is to build a new, fully inclusive and secure web, then we believe our technology is better suited. It is important to note that the entire Maidsafe team have been contributing towards Alpha 3, which is something that has not always happened given the diversity of roles here at Maidsafe. Great to see even the HR, finance, and admin peeps all involved in crust testing. We got the malice in Parsec RFC agreed and added to the GitHub repo. While we're discussing RFCs, it's probably best to highlight that currently we're looking to focus on critical path RFC items where possible so the team aren't distracted away from their work on Alpha 3 features. We will be seeing a few more RFCs being published soon to kick the tires of some new planned features. User Joshua is already working on a DNS RFC, which is soon to drop, and a Web ID RFC after that, along with others from the backend team. We'd like to take this opportunity to shout out user Mav, user Neo, user HappyBean, user JLPel, user Draw, and others who are extremely generous with their time and really engage in the RFC process. The community is surely much stronger for having you guys involved. I fully agree. I've been following some of these RFC threads, and they're really helping out a lot. And they're just donating their time. They're not on the team. They're not paid members, so they're just community members who are really putting in a lot of effort. And I just want to give a great shout out to all of them for their hard work and their hard efforts in making the network better. User Pierre Chevalier 83, he's a Maidsafe guy, attended the second London meetup on Wednesday at the Flying Horse Pub. Thanks to Oscar, user Opacy, for taking command there. It looks to have went really well with community superstar user JPL, even doing an impromptu safe network demo. Read Oscar's summary of what was covered via this link here. So if you're interested in what went on, have a look and see what's going on there. So last weekend, user Doug Campbell gave a talk at the Modern Heroes Conference in Italy entitled "The Internet is Broken. Welcome to the Safe Network." The conference was a good opportunity to get exposure to many different influencers, so we were glad that Doug could represent the safe community there. I'm very pleased to see one of our forum regulars, user Going Deep, has posted a really great article titled "The Problem with Money Online" to the Safe Network publication on Medium. Have a read, give it some claps. So, there's, as usual, there's quite a bit more to the update. There's recruitment section, user experience, safe APIs and apps, and safe client lib section, routing section, and crust section. So a lot of detail this week. If you're interested in what's going on with the safe network development, then please check the link in the show notes and follow what's going on there, because it's really happening, folks. It's happening. It's very exciting. So, that's all I have. Do you have any last thoughts, Mike?
Nope, not for today.
All right. Well, that's all we have for this week, folks. I'd like to thank our viewers for joining the show today. We hope you found the episode informative and helpful. Please subscribe, like, comment, and share our video with others. And tune in next week for another interesting episode. Bye-bye.
Have a good day.